Oh, hey there. Good afternoon. Good evening for some of you, and good morning for some of you else. My name's Elaine Adams. Some people call me Stockmom, and it's my pleasure to welcome you to Aftermarket Therapy. So finally I got the music working, and I just want to let our theme song kind of keep it going here. Now, what is Aftermarket Therapy? This is something that we do, those of us that participate in the market, whether it's investing or trading, just to take a step back and reflect on the day. We can talk shop. We can commiserate on our wins or losses. And one thing I see often left out of the stock convo is the emotional aspect. There's something powerful about being a participant, and whether you're winning or losing, you want to share that with somebody. So this is that space. I'm so happy. I will be bringing guests on a weekly basis, and this week's guest, his name is Ben. Ben, how's it going, man?
It's going great, and Elaine, congrats on the show. This is so cool. It's great to spend time with you and deliver a little bit of therapy hopefully today.
Awesome. Yeah. And I want to thank Benzinga and the audience as well. Spencer, Jason, everybody at Benzinga, thank you so much. And Ben, thank you for coming and hanging out with us.
Yeah,
so
absolutely.
First, and also in the background, I have my backline producer, Christopher, who's going to be just referencing any of the comments and stuff like that. We had a lot of comments last time, and I definitely want to, people have something to say. I want to reference it and keep it topical. So here's what we're going to do today. I normally start out with a quote. I'll do a slight introduction for myself because I'm kind of new around here. I really want to do a nice little introduction on Ben, and we can talk about where he's come from and what's helped him on his journey. And then after that, we're going to get straight into the trading day. We'll do a market recap, some news recap. God, today was an amazing day for earnings and news as well. We had Jerome Powell speaking, so that's always an interesting day when we have Jay Powell, Papa Powell turning on the printer, or today, really dealing with those questions. We'll talk about some strategies, and today's real big talking point is going to be about economic indicators, how we use them, and how we find them relevant in our trading day. These are things that we hear all the time: CPE print, PCI, unemployment. How do you trade off of that? And Ben is one of the people who really got me interested in using this on a macroeconomic trading strategy level. And then last but not least, I had a story that I wanted to reference from Reddit last time, and hopefully we'll stay on time and I'll be able to throw that in there. So first, I'll just start off with a quick quote. And today's quote is brought in by Jamie Dimon, who's just one of my faves and constantly referenced. And the quote goes like this. Most decisions are not binary, and there are usually better answers waiting to be found if you do the analysis and involve the right people. So many times we have these political people, or Jay Powell or Biden's going to be talking later on today, and you want to kill him. It's, hey, this thing didn't agree with me. Definitely the market doesn't agree, especially with him talking about raising tax rates. I have people worried about dividends, right, and everything else. And it's like, you know what? I understand that being a difficult pill to swallow. But these decisions aren't binary. And it really helps me kind of navigate the market, not thinking about things as good or bad, but hey, how can I just trade off of this? How can I remain profitable? So with that said, Ben, do you have any take on that, man?
Well, particularly because you mentioned complex politics, right? Oh, sorry if there's feedback. I agree 100%. I think with regard to just the 2016 election cycle, the 2020 election cycle. I remember having debates with people that, if you liked Trump, that meant that you were anti-Hillary, or if you didn't like Trump, that meant you were pro-Hillary. It was very binary thinking, and there's just so much more nuance to it. And so I like Jamie's quote, and he's a very, very intelligent guy. And so that's just an anecdote that kind of supports what he's saying, which I agree. I mean, binary thinking isn't going to get you very far in the world of risk assets.
Yeah, absolutely. And so for me, right, I don't have a super long history in trading. I've been trading for the past 5-6 years almost at this point. And my journey into it really started from being around other people and hearing those hero stories. And the average person that I found in my retail trading journey was a Republican. was extremely pro-Trump and against a lot of the big government things that you hear Democrats talking about typically. And it affected how I made my way into the markets, right? It affected the stocks that I thought were the ones that I should be paying attention to. And so to kind of move back and continue on and move past those into to people who actually were managing funds or to people who were on the sell side, right? Just added so much more depth and ability to how I looked at the market and took it away from being this binary thing of, oh, this is good, this is going to the moon, this is bad. Oh no, we have a trade deficit. This is negative, right? And allowed me to look at it and say, hey, well, maybe hold on, we're having a trade deficit based off of demand. Or, hey, hold on, maybe this particular economic policy is going to be, you know, negative to some and positive to others. And really, it was important for me just to add more depth. Another thing that kind of happened to me on my trading journey was you get these sites and you get these places where people will give you their version of how they make it through the stock market. And a lot of times to the retail person who I represent strongly, it's, hey, I'm going long on this. I think it's going to go to the moon. And it's based off of, you know, usually some sort of technical analysis. Fundamentals are not commonly spoken of, especially in the circles that I was in. Hey, I'm looking for a breakout on this, especially on volume. And you know what, Ben? I lost a lot of money following people who were profitable because I had no idea what I was doing in any way, shape, or form.
Yeah. No, you're right, Elaine.
Yeah.
I think that's the thing, right? It's because it's easy to know what to buy. It's just so difficult to know when to sell. It's a fundamental issue that particularly with new traders, and it speaks to that balance of greed and fear, which I think is what you're alluding to a little bit. But I agree with you. It's easy to jump on a Momo trade. It's just really hard to know when to pull the plug, and it can be an expensive lesson for sure.
Absolutely. And not only that, but like, you know, after reading more books and maybe we'll talk about a few books that definitely helped me. Options as a Strategic Investment. What's that Tony Turner book? God, she's another one. I'll find my list in a second. Is it Stock Market Investing? Oh, A Beginner's Guide to Day Trading. God, I love Tony Turner. The Handbook of Technical Analysis. These things, plus paying for classes, right? I know everybody, sometimes a lot of people are just like, look, I'm going to go to the School of YouTube, and that's great. There's nothing wrong with that at all. But finding myself around more people, and Ben, you're one of them, which is why I'm so happy to have you here. Something that you said stuck with me, man, and I will never forget it. And I hope I'm not going too far by saying this. But it was like this, man. You said, I'm protected in 2 standard deviations in either direction in the market. Ben, I'd never heard anybody speak like that before. And the idea of getting returns risk adjusted, you know, like it doesn't matter which way the market's going. This is the percentage that I'm trying to get by the end of the year or quarter. That sort of talk really affected me and changed the style and way that I approached the market and traded. I mean, you know, you stop wanting to just go calls and puts and start doing these spreads or, you know, whatever it is, holding equity and selling calls, right? God, that's not something you hear. That's not a sexy trade. But it's the trade that is consistent as opposed to the trade that, you know, might make the humongous gains. And these hero stories are amazing. But anyways, that's enough about me, man. Hey, Ben, I'm so happy to have you. And can you just give me a little bit about your history and your journey that brought you into the market?
Absolutely. Yeah. Let me start by just commenting on what you said about, you know, being hedged as it relates to standard deviations from the mean. Generally a 20-day simple moving average for the most part if you're looking at the S&P. But what's fascinating is that's really the vol trade, and it's just, you know, like you and I had talked about offline, it's just under discussed, it's misunderstood, and it's not very sexy either, but it does capture convexity, and convexity can be a very, very powerful thing if you capture it in the right way, you know, from a risk positioning standpoint. And again, to your point, Elaine, when you see some of the younger traders that are chasing the, you know, quote unquote, go to the moon type stocks, you know, you're better off using, because that is a convexity trade, right? You're expecting some kind of exponential growth in a stock that's probably speculative, but in fact, you might be better off using, and that's a right tail type of an event. You might be better off just capturing vol, where you capture both left and right tails, and maybe that's your better opportunity to capture convexity. So I would start by saying that. With regard to my journey in trading, and thank you for, and by the way, again, great to be here, Elaine. This is so cool. I'm so proud of you. This is just awesome, and I just want to congratulate you again on this this great platform and success. So to tell you, yeah, no, listen. So where I came from, studied. My undergrad was in business, so I did have like some, I guess, classic, education in finance, but nothing that was really in depth. I mean, my career had really been in the CPG space, in the brand building space, particularly in alcohol beverage. And it wasn't until, I traded through the 2007, 2008 period, which is where I first started to dip my toe in the water and cut my teeth. And so, Elaine, that's why I can relate with you 100%, because the guys that I were really following at that time were guys like Peter Schiff, who were, inherently contrarian. And so these guys were very much, into the commodity lean trade, right, and kind of the CTA, type of contrarian trade. And I was very drawn to that. And that's really what got me into the markets and got me so deeply interested, because I had this inherent, kind of dissonance about, how can this work with regard to fiat currency and, very loose monetary policy. At that time, obviously, we were going through, the TARP legislation and, what went on, obviously, with Bear Stearns and Lehman, et cetera. And so that's how I got started, was with a very contrarian view. And so it was miners, it was metals, it was all of that, like Ron Paul trade, so to speak. And that's how I got into the markets. And I looked really smart for a couple of years. And then, of course, I ended up having my ass handed to me. And I realized that I did have to be adaptive, and that this isn't as simple as you want to make it. It goes back to that Dunning-Kruger effect, which we've talked about in other rooms. I mean, when you first get into trading and you make a couple of great trades, it's like, holy shit, this is easy. I can do this. I know it. I can figure it out. But you don't even realize the complexity, the mosaic of factors. And so it takes time for you to dive deeper and really fully understand. And that's helpful, obviously, when you start managing larger sums of money. But that's how I started trading, and I traded all the way up through my career in CPG until I finally pulled the plug and said, hey, we went through a couple of exits where we sold some of these brands that we had built up. So I had the capital, I had the flexibility, and so decided, look, I'm going to take the plunge. I always wanted to have my own fund, and that's what I did in 2019, and that's how I got Steelyard off the ground.
Thank you so much, man, for sharing. I think it really is interesting, the people who manage funds, and that really started changing me, where I had people asking me to work with larger and larger amounts of money. And it was like, okay, well, actually, if I'm working with over $1 million, I'm not going to be dumping half of it into, some whatever short micro cap growth stock. That's terrifying me. But I am wanting to, I took that securities industries essentials test. I'm thinking about and waiting to get sponsored to take that Series 7 and kind of continue to move upwards in this sector. And it's like, once you start thinking about long-term returns, I think anybody would come over to something where you can just be more consistent. And something else that you said, which is, some of my biggest losses have been right directly after my biggest wins. That's when it happened. It was that confidence, that thinking that I knew. And we've talked about it, and so many other people talk about, the market is ongoing education. It is continually learning, and it's really nice to have a place and somebody to talk to after you get your ass handed to you once or twice, to make you feel like, hey, you know what? It's okay. This happens. You managed your risk. You respected your stop loss. You protected your principal, hopefully, and we can come back at it again, because that's the whole thing. This is a thing that we continuously come back to, right? There are other hobbies and things that I've had along the years, but this is something that just keeps giving back. And I appreciate that space and the people who share it with me. I think it's just a huge amount of camaraderie that we have. So with that said, how was your trading day, man? I know you don't trade, but how was your day?
Well, on the vol side, as you can imagine, that's a little bit more of an active traded SMA. But on the core side, yeah, I mean, obviously with earnings, it's a good day if I don't have to trade. But yeah, really, really interested to see, the growth in tech trade come back. Bonds have, as you know, come in a bit, yields have, and I think that's kind of quelled some of the disruption that we experienced through the first couple of weeks of March. So we'll see where things go from here. But for me, Amazon's a meaningful ER for me tomorrow. But was really pleased with the Apple print this afternoon. Yeah, I mean, it was a pretty blowout quarter. And we talked about it a little bit offline. I mean, you saw what Google did, which was really incredible. And I think that is indicative of, what's happening with brands becoming more re-engaged and spending money above the line with regard to advertising that they maybe had not done through COVID. So they're beneficiaries for sure. Facebook, I think I don't run Facebook, but I think Facebook got beat up a bit, right? I think they sold off to some extent. Facebook's not the only
up 5% in after hours. Actually,
they're up.
Yeah, though they're definitely up.
Yeah, see, so that's the thing too about Facebook is, because Facebook's always been the only game in town when it comes to digital advertising. And I think that dynamic is shifting.
Wait. Sorry, Ben. There is 325. This can't be right.
Is it ripping? I remember I saw some before you and I got online. I saw some.
Holy shit, dude! That's it's ripping. Oh my god, that's in my portfolio. Well, wowzers, that's great. It's at 325, man. We've been sitting at 307 for the past few days. Oh my! I mean, I showed you my portfolio. I'm sorry to cut you off. Jesus Christ, I didn't really look at that fully.
No.
Wow.
Listen, I think it's the same dynamic that allowed Google to have such a blowout, which is that brands are now they're ready to deploy capital into engaging consumers again. Where it's on the other side of COVID. I think all indicators are that we're managing it. Of course, there's internationally on a macro basis. There's concerns in India, et cetera. But I mean, I think that brands are ready to spend that money because they need to find ways to engage. And again, when you don't have the brick and mortar opportunity, right? I mean, a lot of brands engage with consumers through the brick and mortar experience, what we call on premise. When that's gone, you have to find creative ways to do it. And obviously digital is one way. So it makes sense that these businesses are healthy. And honestly, Facebook from a multiple standpoint they're not a very expensive stock if you compare them to the rest of big tech. So yeah, not surprising to see Facebook up, and that's great. And like I said, I kind of juxtapose that with what's happened with Microsoft, which was largely a great quarter. So you just let the knee-jerk reactions happen and let that fade. At the end of the day, if you're running money, you're thinking about it. Not necessarily on a quarter-to-quarter basis, although that's for some people that's how you're benchmarked. But you're thinking about things in a little bit more of a longer-term perspective.
Yeah, absolutely. And in terms of like exposure to emerging technologies and kind of where I see the future going, right? Like, so there's the value side of it where I want to know about the multiples and compare it to, comps. What do you want to talk about? Twitter? I wouldn't really include WhatsApp or anything like that. But it's like in terms of the future and thinking about the companies that are going to be the basis of how we interact with each other. That's why Facebook's in my long-term portfolio. I mean, and I don't hold through earnings as a play for myself, right? My way of playing earnings is either I'll play the run up or I'll wait for a reaction and play the recovery. But just, continuing to see a company like this jump in the sectors and segments that it's been great at, which is ad revenue, right? Like that's what they're doing. We're seeing a jump in that. And also like I'm not hearing anything about difficulties dealing with Apple and their changing of whatever data tracking. So that's a positive for me as well. And I'll talk a little bit about the trades that I'm sitting in. B-Dry, the ETF that basically is bulk dry goods, specifically with shipping. That's been something I've been holding on to. I've hopped into a natural gas trade a few days ago, and that's something I'm holding on to as well. We had the EIA stock change, and that was looking really promising from a crude oil level. Facebook, which I'm sitting in, God, I can't wait to see what that looks like tomorrow. I'm really, really excited on that. Freeport McMoran, I think is how you say it, but this is a copper trade, right, based off of Biden and the infrastructure. That's something I've been sitting in as well and kind of looking at. I mean, copper's piping hot right now, so this is definitely not financial advice for everybody. This is how my trading day is going, though, right? Occidental Petroleum is another one, and this is once again kind of exposure to that crude oil, as well as, you know what, I really want. Today's not the day to talk about it, but part of me like kind of hopping into Oxy as well, and I'm not really sure how long I'm going to let this play out, but we all want exposure to alternative energy fueling and things that are going to, you know, help the world, right? And these other forms of energy are not nearly as profitable sometimes as the crude trade. And so you see these other companies that are pure renewable plays kind of struggling in terms of price action and direction. However, one of the biggest backers, I guess, for a lot of the renewable companies that we don't hear talked about very often are the big energy companies, and specifically Occidental Petroleum. In terms of carbon capture, that's something that I was looking at with them. Right. Elon talked about carbon capture, and I personally, like, you know, I have an ESG heart. I also want to see, you know, global warming, whether or not people believe in it, or that's not something I'm trying to debate. But I do want to see us try to remove some of the deleterious effects of internal combustion engines, and in general, the progress of humanity, right? Like, where do we get our energy from? We get it from burning fuel. What does that do? It creates carbon. What do those companies need to do? They offset it by buying, you know, these whatever credits, right? And so seeing energy companies invested in renewables and also just this cleanup is nice to see. And so that's something that I kind of liked about Oxy. And then last but not least, a nice short on Spirit Airlines, which I'm happy to do and going to continue in this trade for a little while. Oh God, and they're kind of up in the after hours, but you know what? I took a flight on Spirit Airlines. This is the sort of person that I really am in real life. When I go to a business, and I was like, I fly American or whatever else, and it's not to say that they're doing great either with the cash burn rate, but you know, I get a bad feeling from a company, or you know, that I was like 5 minutes late for being an hour early, and all of a sudden they canceled my flight, and it was a whole thing. So I just ended up buying a whole nother ticket, and I immediately entered a short position, and I will exit it once we stop seeing this thing kind of spike to the downside. So there you go. And am I taking? I took a bit of a loss on SPY. So there you go. Not all winners. Hey, Chris.
Hey, Lane, and hey, Ben. I was just wanted to make sure that we're staying engaged with the chat. So we also have some questions from a couple of people that frequently visit us on the Clubhouse platform, wanting to say hello and give them, if you want to jump off into why we are here now instead of the Clubhouse platform for 3 or 4 minutes briefly. And then Moonbeam wants to get Ben and Elaine's thoughts on Google versus Roku standoff over.
Oh, gosh. Let me make one quick comment. Let me make one quick comment, though, on Elaine's point about the renewable trade. This was a trade that largely materialized if you go back to July, August of 2020, pre-election, right? That was really the golden age for that trade, and that trade materialized beautifully right into the election. And it was actually a great bellwether for the outcome of the election. So I would say that about renewables. And for me, it was, it was certainly like Nexter Energy Partners, whether it was NEE or NEP. It was Atlantic Infrastructure, which I think we've talked about in other rooms, Elaine, which is AY. And then, of course, there's Brookfield Renewable, which is a really interesting diversified portfolio in that space. Those trades were beautiful trades that really did materialize going into the election. Now I think we're in this period of consolidation when it comes to the renewable trade. So I think we need to see what the next catalyst is moving forward. So I just want to make that comment on the renewable trade because it was a great point from you, Elaine.
No, absolutely. So sorry, Chris, what were the questions again?
So one of the questions is just, talk about a little bit of our transition from Clubhouse to Benzinga. A little, and then they want to get a little bit. Owa Moonbeam wants to get you guys' breakdown of Google versus Roku in regards to a standoff over data.
I don't know if I have a really strong take on that one.
I don't think. I think Google just. I mean, it's not a fair fight.
I don't know that they're the same. Right? Yeah, go for it.
No, I was just going to say. I mean, just to be totally transparent. I mean, I can only say so much. I mean, I have frankly, I have exposure to both names. I've been a Roku believer since the $30 handle on Roku, to be honest. But listen, it's not even a fair fight. I mean, Google, with regard to their search business, the data harvesting and monetization of that data is just exponentially more valuable than what Roku can do. You know, Roku does have some great partnerships with equipment manufacturers to where it's pre-installed, et cetera. They do have they've gone to this advertising platform, which I think is interesting. And I like Roku, but like until Roku decides to go the way of Netflix and start creating original content, I'm not sure what's going to take Roku to another level from where we're at. But again, I'm a guy that's been a long-term holder of Roku, so I don't. And by the way, great management, great C-suite, love their business. And again, the cutting the cord trend is really what's helped them. And the cutting the cord trend is actually gaining a lot of velocity, as you guys already probably know. So I do think Roku is a beneficiary of that trend. But to compare them to Google, to me, is a bit apples and oranges.
Actually, okay, so I'm seeing what she's talking about. So it's not just comparing them, maybe. So Google basically told Roku that, let's see here, they're threatening the removal of YouTube TV in order to get Roku is saying that Google is threatening to remove YouTube TV from their platform, right, in order to get preferential access to consumer data in the future. That's what's going on.
So yeah, it's all about the data, isn't it? It's all about the data. That's the money. That's where the money is. Yeah,
I mean, I mean, Google definitely has the ability to do that and to continue moving. I don't know. I have a Roku TV. I'm also a believer in Roku. I don't know if I'm really into the amazing growth story. I know people who have $500 EOI price targets on Roku, and I'm not sure where that growth is actually going to come from currently. Even though we're seeing a growth in subscriptions and year over year for sure. However, I mean, if they want to go up against a company like Google in terms of data, I mean, I think we're going to see some capitulation, to be honest. I don't know that it benefits any company right now to, take a strong stance against Google, even if it does require them to use different chipsets and cut on that, bottom line. I don't see Roku having much ground. I mean, who else are they going to go to? Right? Yeah, YouTube is when I watch TV on YouTube. Like, to be honest, like, I mean, I have Netflix, Hulu, but I spend more time on YouTube than anything else on TV. So in terms of like their market saturation and the use case, I don't know how you replace YouTube, but I do know how you replace Roku.
Yeah. They don't have a whole lot of leverage. There's not a lot of propriety to their model in that sense. But so yeah, I mean, if it were a head-to-head battle, but again. Roku has been an incredible company over the last several years. They've done an incredible job of building that business and, finding ways to create value for shareholders. So I'm a huge fan of their management and what they've done. But again, I'm a full disclosure, I'm long Google as well. And I've just an unbelievable quarter that they printed on Tuesday. So, we'll be respectful of that as well. So there's nothing wrong with owning both. Let's put it that way.
Absolutely. And just to answer the other question about what we're doing here, I mean, you know what? At the end of the day, the mission of me talking about stocks and meeting all these people in some ways was to. I actually didn't have a mission when I first came on Clubhouse or came on social media and started talking about these things. It's just I enjoy it, right? I trade every single day. without fail. And this has been happening for years at this point. And so to find a community of people who also wanted to talk about it, who also wanted to kind of go deep into market information, and to we hang out and talk about earnings. Like I get a group of people and we listen to Jerome Powell speak, and it's an event. We have games associated with it, and so Clubhouse, that app is great. Twitter Spaces is great, and you know what? It's great to partner with a company like Benzinga, which is, I mean, we've all seen them, in terms of getting news and information and reference those articles. So I'm just really happy to continue to keep doing this thing that brings me joy, and I hopefully the guests that I have are enjoying it and we have a good time about it. And as long as we can, continue to bring a community and have this sense of community around this thing that makes me so happy. That was really it, I guess, to grow the community and to be more inclusive. So
let me add to that, Elaine, because I got to say, Elaine is just one of the best voices. I'm such a big, and I know I've said this to you, Elaine, offline, but you really do bridge that gap. I mean, because again, you had mentioned it earlier, you came, kind of from the perspective of the retail trader. And so you understand where there's these information gaps or there's these, inefficiencies or just, kind of air pockets where things aren't getting translated properly. And I think this type of platform for you, it's just so perfect. And like I said, it was totally fun for you to be able to bring me on like this today. And I thought I'd mention that, I think you're the right voice. You've got the right frame of mind to kind of bridge all those gaps, because there's just a tremendous amount of information, inefficiency that needs to be addressed.
Yeah, thank you, Ben. And you know what? I am nothing without the community and people around. So I appreciate you and everybody who's kind of in the comments talking. And I think collectively we are an amazing trader. And individually, we can at least be vulnerable and expose ourselves. And if that doesn't help, then I don't know what will, because certainly there will be I don't tell people what to do. And I don't actually look too much advice either, on a large scale. So with that said, you want to do a quick market recap and just kind of go over some of the things, and after that we'll talk a little news, and then we can talk indicators, because I really enjoy talking indicators with you.
Yeah, we can talk indicators. Yeah, you run through. Yeah, if you want to run through the data check, Dow, Russell, NASDAQ. In fact.
Absolutely.
I don't have a screen. I'm here in my living room. I'm normally upstairs in my trading little club, right? So I'm down here in my living room with you tonight. So,
all right, let's get it going. Let's see if I can get this screen to come up.
It seemed pretty muted, frankly, right? I mean, we didn't see a whole lot of pronounced movement. I mean, I think I think there was some movement with the Powell comments around 2 p.m., but for the most part, I think we were pretty flat on the day.
I mean, Ben, we jumped from 417 to like 419 in a matter of minutes, and I mean, I've been kind of holding on to this SPY 420 trade, and bullish on the overall state of the market. I think we've had some really constructive growth. So here we go. I'm looking at the S&P futures right now, and let's take a zoom back out. Let's hide this.
Yeah, I don't think you want to fight inertia, right, Elaine? I agree with you. And if anything, the Powell's comments today kind of supported the bull case for the most part. I think the Alphabet earnings on Tuesday crushed a lot of bear hearts. And so the rest of the week's going to be very interesting. But yeah, I'm very constructive on the market as well at this point, particularly after the tumult we've had over the last, 8 to 9 weeks.
Absolutely. And also, I mean, so just in terms of like a chart reading or something like that, it's like we had this line of resistance here at the 416. We were trading between that 410, 416 level. We broke over on a volume day. Beautiful. And then after that, we're sitting, we're still consolidating. I love this type of movement. And I know people struggle, especially on a daily basis, looking at a doji day. And it's like, oh God, indecision. But for me, that indecision is positive as long as it's, it depends on what was happening before, right? Did we have a breakout? If I, scroll to the left, are we constructively growing and then consolidating and then holding to a what do we call this, like a high base consolidation, right? Like this sort of stuff for me is really positive and bodes well for the, the short to middle term future. I don't try to predict everything or know exactly what's going on other than looking at these macroeconomic indicators. But just from a candle chart, I'm loving where we're at and really honestly looking forward to see how we progress through the end of the week. And really honestly, I just hope Biden doesn't go too hard on taxes tonight. I mean, he's chosen some really heavy topics. Yeah, I was wondering how this presidency was going to feel. I don't know if we're even past the first 100 days yet. And he really is talking about some things that are market moving types of things. So yeah, here we are. I mean, market closed at 417. We're sitting at 418. And once again, I'm finding it constructive on the S&P. Let's look at the NASDAQ briefly. And the NASDAQ is a similar story in a different part of the chart, right? So here we are yet again. Doing a nice consolidation pattern. And if I can come over here on the weekly, so this is the exact same level we're sitting at that we got rejected from back in February, right? Here we are sitting at 13,800 basically, and holding above that. So for me, we'd been in that 13,600 to 13,800 region. And for me personally, holding above 13.8, moving towards the 14,000 level, and holding above that with this type of consolidation pattern is just something I'm looking forward to. As you said, we saw Google, we're seeing big tech earnings with this week. And big tech earnings have come back so far mostly positive. Even the things that weren't big tech, like MGM reported earnings today. I'm very bullish on a lot of these casino trades as well as the hotel part of that. And looking at their earnings, looking at them doing better on EPS, even though they're still negative, obviously. But it's half of what we expected, right? So this shows something pent-up demand. Right. We wanted confirmation of that. We've been seeing consolidation and indecision in the markets. We've been seeing strong reaction to 10-year and yield rates. But this pent-up demand thesis is definitely being being proven by looking at this positive price action. When we get these positive earnings, we're seeing people hop into these trades. They're definitely confident to go in, especially as we're getting guidance that says, hey, look, we're looking forward to even more gains in Q3, Q2, and to the end of the year. So I'm loving these consolidation patterns as well. And I'm really looking to see us hold at least around this 14,000 to 13,800 level and make our next leg up. And then on the bearish side, of course, because you got to go both ways. I mean, if we did get rejected from here and not hold above the 13,600 level, I mean, that, and it's not a bad thing, right? How many of us Jay Powell talked about it today and saying that, hey, there might be a little froth in the market. We might be seeing some overvaluation in terms of some companies, but are we going to say that Apple is overvalued? Not I'm not going to be the one to say that, right? So even the places where we do have maybe some stronger growth trades, I guess Tesla would be the number one. We're seeing that validated in some ways by positive sales, and positive demand. So I'm really feeling these. And then to move over to the Russell, the poor Russell. So the Russell's been trading in this 2,200 to 2,300 range, and here we are again. Right, I believe we started this morning actually pretty close up there. So yesterday we were sitting fairly close to that 2,300 level. We took a nice rejection, came down and back up for the day to end slightly down. And here today we're coming up again and bouncing up against this 2,300 level. And yes, small caps are different than large caps. I think right now the momentum and energy and what people are looking at is large cap tech. But what's in the Russell? We have some of our favorite energy trades. We have some of our favorite small healthcare trades. And, one thing COVID has done is bring a lot of attention to a lot of these smaller healthcare companies that do have, once again, a ton of potential. Not only that, it's brought a lot of attention towards the FDA approval process and people making their way through that. Anybody making ancillary products for any of the things related to COVID as well. We've been seeing oxygen masks and anything related to a backpack, whatever, things that help people recover from COVID specifically. So I guess that would be like medical tools also go. And I'm not bullish or bearish necessarily on the Russell, but just watching this thing trade between this range and still continue to hold, this is good. Range trading is something that I really don't mind at all, especially when you're trading on a sector ETF like this. an index. And so once again, really liking this price action as well, and wondering what we're going to do if we are going to see some growth above this $2,300 level, or continue to just trade right in that range. So for me, it's like every time we fall below this 2,200 level, we continue to kind of come back up. And for me, that still is showing a lot of confidence, even though we're definitely seeing a good amount of volatility as well. And the vol trade, right?
Agree 100%. And yeah, we could talk about the vol trade, but yeah, with regard to whether it's the Russell or the NASDAQ or whatever, one dynamic that I do think is worth noting is just where we've seen the NASDAQ or the Russell, in fact, kind of catch a bid along with, this inflationary measure of, let's just use the 10-year as an example. We could go to the 2-year as well, but let's just talk about the 10-year, where we've seen them both move in unison higher. That's extremely bullish for me. So those are some of the things I'm looking at too. And to some of the technicals that Elaine's pointing out, obviously very short-term stuff, and these are tradable in the, in the moment, right? In a time window of, let's call it a week, 2 weeks. And that's what's just so important, because Elaine, we've talked about this in other channels. If you're going to trade that way, you really do have to completely remove emotion from things, in the sense that, this notion of like going to the moon, get that out of your head. That's nuts. That's insane. If you're going to trade on a weekly basis or an intraday basis, or on these movements that we're talking about that you just highlighted, Elaine, nothing's going to the moon, man. Like, you got to find ways to scalp trades. You're just trying to make a little money on the upswing above a 50-day, right? And just get, close your trade and then wait for another opportunity to reload. That's just so important. So if you look at things in a very short term, kind of landscape, it really should kind of shape your emotions and your psychology, because if you're taking on a different type of an approach where you're owning stuff for at least a quarter or a couple quarters, that's much different. But like when Elaine's breaking down these, like, these granular movements of these indices, you got to know, if you're going to trade that, you've got to have zero motion. You got to be able to cut your trade, get out when you hit your benchmarks. And that's very difficult for most people, because, as you know, Elaine, everybody gets drunk on this notion that something's going to the moon, right? And essentially what that is you get drunk on greed. And that's a difficult emotion to manage. Great analysis, by the way, on the indexes.
No, thanks, man. And I totally agree with you. I mean, like, that technical trading for me, I found a great place to trade in some of these indices. And just to kind of go down, because we definitely are over, we should keep on moving. But like, the energy trade, right? So me personally, loving the energy trade. I said I was sitting in holding Occidental. That is very true. And I mean, I'd been holding XLE for a while as well, and kind of moving based off of that. We saw demand coming in. I mean, gas prices hit an extreme low last year. And since November, I'd been sitting inside this trade and watching the potential, right? And so we saw, I don't know if you like EIA or Baker Hughes, or you listen to the OPEC meetings, any of those things, which are all great economic indicators, by the way. And also, just for people listening, I put out this morning briefing on a daily basis, and we talk about, just give you the time and what I'm looking at for the day, so that whatever, it's just something so that we can be prepared. It doesn't say tell everybody everything. It's not the Bible, but it's just another thing. If you follow me on Twitter or Instagram or whatever, something that I hope just adds a little bit of value to people as they enter into their trading day. It comes out an hour before the market opens, so you've got plenty of time to sit there and say, oh, okay, cool. We got a crude stock change today. Well, what did I have on it today? Oh, goods trade balance. Oh man, yeah. The crude oil.
Trump favorite. That's a Trump favorite. The trade balance. That's very politically sensitive for the MAGA guy.
Well, let's get in there, man. I'm down to talk trade balance for a second or two.
Yeah, no, we can. But no, just to your point about high frequency data, it is, and you do a great job capturing it, Elaine. And I remember jumping in some of the rooms that you do on Clubhouse, and we'd talk, ADP or PCE and stuff like that, and just any number of high frequency data points. They are meaningful. They just help you frame, the larger dynamics of what's happening in the market. They're not necessarily actionable, right? Because sometimes it's very counterintuitive. Sometimes good news is bad news. We see it all the time with NFP jobs reports, right? First Friday every month. We'll see sometimes a very counterintuitive move, but it does help you frame it. And to that extent, it helps your psychology, right? Because it doesn't matter if you're in a position that either makes money or loses money. What's most helpful is if you know why it's moving which direction. If you know why, then you can manage that. If you don't know why, get out of the position. And this should say this, I should preface it, right? I'm not giving any kind of financial advice here, but I'm just trying to give you like an armchair, like Dr. Phil type shit here. If you don't know why a stock or an index or whatever is moving in a certain direction, then you shouldn't be in it. And so that's what these high frequency data points help you understand, is what those broader dynamics are. And that's why I have fun chatting with you about them, Elaine, in a lot of your clubhouse rooms, which is a ton of fun. Chris as well.
Absolutely. I don't know. XLE was the clear winner today. The crude oil stock change, as well as the OPEC meeting. OPEC agreed to still limit oil crude output while we're seeing WTI and a lot of the places in the States continue actually to grow in terms of output and put more oil rigs online. In terms of comparing just WTI to Brent right now, I'm really liking the price action on WTI. Currently right now we have crude oil down 0.19% and Brent down 0.27%. And that doesn't mean necessarily much. But looking at the difference in price between these two, we have crude oil sitting at 63.86 and Brent sitting at 66.78. And so far for me, I have a fairly conservative, amount that I really want to see these, price per barrel grow. But I'm looking towards 65 in the next, month or so, as we continue to see demand grow, and we're seeing not a strong return to pushing supply side, right? And I don't know what that bodes for in terms of as we get into summer. I think that we have to think about the macroeconomic side of it, where a lot of our oil is exported, right? And who do we sell it to? Well, we sell it to China, who just said that they're interested in buying a considerable part of Saudi Aramco. We send it to India, who is currently going through an extreme case of another wave of COVID and struggling with that, right? Or we sell it to Canada, another one of our major oil importers, who we export to, who is also seeing an uptick in COVID. They've had more daily deaths than the U.S. For the past week or so. In Mexico, right? So in terms of output and demand for the next 6 months or quarter, I'm not exactly sure, but we definitely do have a solid level on demand right now, as well as supply is not. It's still limited. So for me, these things are positive. Also, as we look into, I think that it's really understated the effect that kind of moment in Texas with those unprecedented weather formation that stopped production. Right, that was considerable, and I don't know that it got the amount of news that I thought it should have gotten, just in terms of the actual effect, and it's like a lagging effect that we see in terms of this, because they have supply. Right, it's not like they're just pulling it straight to the barrel. There is stored up supply, but when we see an easement in just pulling in general, that will have an effect, right? Oil for me is pure supply and demand, and I try not to get too emotional about it. I trade the trade until we see prices kind of fall, and then I'm going to exit and re-enter when I find us at a great point. And historically, looking at the 63 to 65 level is it's a little hot.
If I could, I'll make just a couple comments in this, because this is important. Oil obviously is traded as a commodity futures contracts. You need to understand front month, second month, third month, sixth month. You need to understand futures if you're going to trade. So, by the way, I'm not recommending anybody trade oil, but it gives you such a deeper understanding in terms of the context of what's happening in the equity markets, particularly those that are sensitive to input costs, in this case, crude oil. And the reason I say this, and I wanted to highlight this point, is because it's the same thing with vol. If you're going to trade vol, you have to understand the contracts in the future, not just the spot VIX on that day. Just like you can't really give too much of a shit about what the spot, WTI is on a given day. What's the contract for the next front month or the month after that? And that's how you understand. When you start to understand contango, you start to understand backwardation, you're going to get a better sense of trajectory. As an investor, you want to understand trajectory more than you want to understand what's happening in the moment, right? So trajectory is everything. And that's why these future, Elaine's talking about what's happening in energy. That's why the futures piece is so critical to understand. And it's something and this isn't like literally like Chinese algebra. Like people can understand this. You don't need an advanced degree to understand this stuff, but it does take some time to just kind of dive into it, immerse yourself in it, and you'll understand it pretty quickly. But essentially, understanding contango and backwardation is so critical, particularly in the energy trade, but it's the same thing in vol. And we could go way into the weeds on that stuff too. But yeah, so to your point, Elaine, when you're looking at spot, whether it's Brent or WTI, whatever on a given day, it's not as important as what those contracts look like as a cascading effect into the future, because that's what's going to give you a sense of trajectory. Trajectory is investable. Intraday movement is not. Just think about that. Yeah. Yeah.
I want to read a comment. Somebody said, as oil prices rise, the expensive offshore production will increase. And a lot of projects that have been shelved will kick off for offshore EPC construction companies, McDermott, Sapem, and yeah, absolutely. So using the current spot price of oil as a gauge it doesn't give you the entire picture, even close. And at least for me, kind of maybe to go back to like more of a personal story and just how I feel. When I first started trying to trade commodities, people were like, "You can't do that. What the hell?" There's people who only trade oil. There's people who only trade cotton or orange juice or whatever, soybeans. And in order to do this, you have to have a drone flying over and checking capacity. And you know what? Maybe for that person that is true, but the availability of the information, you can go to CNBC and they have a whole section that's purely for crude oil. Right. You can go on Benzinga. There's places where this information is available, and it has been really great moving into these trades. I think as the growth trade got hot, and as we saw some, tempering or frothiness, that's the word that economists like to use. We saw some froth in our tech markets and stuff like that. There were some great places to find clear market direction, and for me, energy was one that made sense. I mean, but I sat here and told you guys in the beginning, I'm sitting in bulk right too, right? I continue to see a huge global demand for specifically stuff that's feeding livestock, right? And then on top of that, we're hearing about shortages on a supply side for farmers, and that's in China, that's in the U.S., that's all over the place. So you know what? Maybe I'm wrong, and I'm so happy if somebody corrects me and tells me exactly what I'm not seeing. But trying to boil it down to understandable segments has been fun, and talking to people like you who are a little bit more knowledgeable has also really added to the way that I'm maneuvering. So I hope that if anybody is interested in it, to at least take a step. The information is certainly there, and backwardization and contango, like you said, it's part of the vol trade too. If you trade UVXY and you're wondering why it's not going in correlation with VIX, that's why, right? That is exactly.
There's decay in there. Like people don't understand these leveraged products have decay that's baked into the. That's Elaine, we could do a whole hour on that, but I do want to just point out one of the things that you had just mentioned as it relates to oil, and I think it goes to the question that was asked. And that's another thing that's counterintuitive. People don't understand, the price of oil coming down is deleterious to, for example, the shale oil business in the United States. It does dry up capital. And when capital dries up, people lose jobs. So there's a trade-off. When gas is really cheap at the pump, that doesn't necessarily mean it's great for the country, in the sense that we do have a substantial and healthy energy business, largely derived from shale, and obviously there's elevated extraction costs and processing costs as it relates to shale versus just traditional refining of crude, and that is something that's misunderstood, right? People don't understand. Like when Donald Trump was president, and he would he'd have a big hard on when gas prices were low, not understanding that was actually potentially eliminating jobs. So the world of economics is a strange mistress, and you really want to understand it, because sometimes, again, it's like one of those weird things where good news can be bad news. Low gas prices are great, but what does it mean for jobs in that energy sector? It can potentially be a deleterious effect, and just something to think about. Not always, but it's just something to keep in mind.
Yeah, absolutely. And I want to keep it moving, but I really love talking energy. So that this has been fun. Oh, right, trade deficit. So yeah, balance of goods. So for anybody that's not, whatever. So the balance of goods is a comparison of exports to imports, and we see a deficit happen when we have more imports than exports, right? And it doesn't necessarily have to be a bad thing. So it can be a sign of a strong economy and lead to stronger. So right, we are indeed exporting, but we're importing more. And why is that? Or at least to my understanding, well, we see global, like, on the macro side, a lot of the people whom we export to are currently right now struggling with whatever. I mean, India's GDP fell by 7% last year and is already down again, right? And so if you're sitting in anything, God, what was it that they were the number one importer of? It'll come to me in a second. Either way, and it's the same thing with China, right? So these places that import a lot of goods from us right now are still currently kind of rebuilding their economy. Or we talk about Mexico and Canada, right, who are some of our main trade partners, to be honest. They're still kind of going through and dealing with COVID related problems on their side of just demand. But here in the US, we're really reopening. It seems as though that reopen trade is continuing to, I mean, as much as I have all of the fear in the world, honestly, about these new COVID variants, currently right now, we're seeing that people are reopening. We're not seeing a huge spike, even though we know that Indian variant is in the US currently. And so, of course, we're going to see a trade deficit. We're importing more than we're exporting. I don't see any particular problem with that. And let's look at the numbers real quick.
I'll make a quick comment with those numbers too. I mean, just as it relates to trade deficit, it's completely misunderstood. The notion that it's a negative number is completely, it's just completely misinformed. We have a standard of living in the United States that's very different than other countries, obviously. And if you like buying shit at Walmart that's like pennies on the dollar, and you enjoy those cheap prices, that's a result of a trade deficit. We pay people a whole lot of money. We have a ton of money that has to go into payroll taxes, healthcare expenses, et cetera, to sustain a workforce here in the United States and sustain a standard of living that we export that. When we have a trade deficit because we're importing goods from a workforce that's living at a much lower standard, that's why the prices translate in a way that's beneficial to the American consumer. People think like, hey, made in America is great. Well, made in America is great in some instances, but not in all, because listen, I mean, your blinds or your steel or whatever it is, some of that stuff is better imported, made with lower cost goods so that you get the best acquisition price as a business or as a consumer. Whereas you can't have it. You just can't have it both ways. So understand that just because there's a trade deficit, that's not necessarily a negative thing. In fact, it's quite positive, particularly as it relates to inflation. And we could get into those issues too, Elaine. But I just wanted to make that comment. Yeah,
we are going to talk inflation before this thing is over. I want to talk CPI and PCE, but until we get there, somebody wrote, "America makes air. We need to import stuff." And I used to be a small business owner. Back in the day, I had this revolutionary idea to sell music on USB wristbands because I thought that was the future. And who has a CD player anymore? And I wanted to buy these products from America, and I found out the cheapest bulk price I could get for USB hard drives that were encased in a plastic thing was about $8 for a gigabyte a hard drive. And then I looked in China, and it was like 27 cents. Right. And it's like the small the small retail business, these, that I feel like that's the American dream, right? People who are kind of don't have a lot of money, but have a great idea and want to make it happen. I mean, there's a reason why so many businesses go to China and come back with complete product lineups. And yeah, you have to deal with, inventory checking. right? And whatever your product line. However, like you said, having these imports and seeing that we're having a trade deficit where we're importing more, that's not necessarily a negative thing at all. And also, I think once again, it's a confirmation of pent up demand. People do have money. Not everybody has money, and Lord knows I wouldn't want to be an essential worker or have to work at a grocery store right now. I have nothing but respect for people who are struggling through that. But at the same time, you know what? If you can get cheap goods from somewhere else and start a small business, we see people. I mean, Shopify, Ben, Shopify year over year, one of the biggest gainers.
Yeah, absolutely. No, 100%. Elaine, you're totally right. And I just would add to that. That's why protectionist trade policy is so deleterious. That's why tariffs don't work. We have to accept the fact that we've got a globalized economy. We'd be fools to just turn a blind eye to that. And so to that extent, tariffs are inefficient to the sense that it's basically a tax on the consumer in the domicile country. And to me, I really struggle with that. And again, that's more of an ideological thing because I'm ideologically conservative. But for me, I'm all about free trade. I want efficiency. I want best possible acquisition cost. And, I think that everybody can benefit in that type of a dynamic. Whereas when you start to get into this protectionist stuff and start to protect certain demographics on a geopolitical basis, that can really create problems, as we saw in the steel business in 2017.
Yeah, absolutely. Somebody wrote something about CCIV. Let's hear the CCIV news if you've got something new.
Not me. I don't touch SPACs. I'm not a big EV guy. In fact, for me, EV, I mean, I don't really chase a lot of the the OEMs. I like GM in the space, to be honest with you. It's not a sexy trade, but if you really want exposure to EV, I think GM or Ford is the way to go.
It's an extremely sexy trade, and I have both in my long-term portfolio, and I'm not going to let them go. I mean, also, who did report amazing earnings, by the way, and guidance would be LG Chem. LG Chem was today.
Yeah.
And if we talk about the major battery manufacturers on this planet, CAT-L, Panasonic, LG Chem, and look at those partnerships and look at the production of new technology and their investment into different materials to get more battery density, those longer life batteries and faster charging with the different metals. I mean, that's who I'm bullish on. Not necessarily any of these car manufacturers. It's the people who have proven that they can make batteries and ship them on a global level, and that's who all of the car manufacturers are contracted with, Tesla included. I think people think that Tesla is just making batteries, from thin air, and they didn't have any partners. And CAT-L was a major partner in everything that they do, and even Elon talked about it in his earnings. Hey, we're buying. We are buyers. We can package these things and throw them together, but in terms of thinking that this was just something that they have that's revolutionary that nobody else has access to, I'm really into the battery trade, and specifically GM as they're building battery manufacturing plants, 2 large ones. Not only that, the amount that they're going to, the amount of cars that they put out into the world, Tesla is 1% of the U.S. EV market, and I don't even want to get into the big Tesla conversation, right?
Let's just put a fine point on this because it's such a key point, Elaine. There's nothing proprietary about Tesla. It is a brand. It's just like Pepsi or Coke or Sky Vodka or Grey Goose Vodka or what. It's a fucking brand. There's nothing proprietary necessarily about it. They just make electric charged vehicles. Anybody can do it. And so the fact that it's like such a cult stock, which I scratch my head understanding that. I mean, I guess Elon is like a, larger than life type of figure, which okay, that's fine, but that's not a place I want to put my money because that seems way too emotional to me. So just really important to understand for people, because you mentioned, Elaine, they're buyers of this technology. They're not creators of this technology. They're buyers of it. And so there's nothing proprietary about Tesla. So yeah, if you like Tesla, you love the bull case, that's great, but make sure your feet are on the ground while you can keep your head in the clouds.
Absolutely. I mean, also looking at what was it? GM and ChargePoint, right? Did we get news about that after?
All the infrastructure, all the charging infrastructure blew up today. ChargePoint, Blink.
Blew up.
Yeah.
And it's like they have a more robust network, obviously slower charging speeds. But I mean, it just creates the argument for all of these other companies that definitely have value, that definitely might have, in terms of GM and Ford, a huge amount of market saturation. When I think about who's going to be, I mean, the Tesla truck, cool. That's cool. It looks cool, I guess. But when I think about the number one selling car in the US, it's been the Ford F-150. And that's what people are going to continue to use. When they make an electric model, that's what people are going to continue to be on until further notice. And so that is why I continue to be bullish on this. And as well as just something that I was thinking about, like the NIO trade, because I'm much like you, I really have stayed away mostly from a lot of the newer, smaller EV companies, although I'm interested in China EV and I'm interested in innovation and I want to understand what the future is going to look like. And thinking about NIO and these battery swapping facilities, like the fact, I believe the number is, and I might be wrong here, it's 318 batteries that they can swap per day in one of these things. Right. And compared to Tesla, which takes, I want to say 15 minutes for a 200-mile charge, that's 96. Right. So if we just talk about number and scalability, actually, there's an argument for the NIO thing. There's an argument for different types of battery technology in the first place. So yeah, go ahead.
Talk about their total addressable market too, which is far different than the U.S. But let's actually bring it back to a core component of this, which is that let's talk about opportunity cost. Everybody wants to chase these trades. Listen, you're not an Einstein to know that there's a trajectory towards EV. Like that doesn't make you some kind of next level thinker to kind of linear thinking, right? Like, of course we're going to be at EV. Everybody knows that. So why battle it out in these trades? Because how are you going to pick winners and losers? I mean, that's a difficult thing to do. And so there's an opportunity cost element here, Elaine, which I think is totally under discussed as well. There are other areas to make money. People get obsessed with the EV trade or the batteries or all these derivatives of EV, and they want to try to, because again, it's all about going to the moon. Nothing is going to the moon. Nothing. It's not.
Hey, Ben, real quick, I want to address this because this is a point that a lot of Tesla people want to tell me. Full self-driving will be the game changer and Tesla will be the most valuable company in the world. Well, and this is the point here. Tesla has currently to date 0 autonomous driving miles recorded according to the National Highway and Safety Administration. 0. Not a single one. And why is it? Because it is not full self-driving right now, right? It is assisted autonomous driving. Now, if you want to talk about the companies that do have data related to autonomous driving, it would be Waymo, right? It's Cruise. These are companies that you see them driving around. And so in terms of even thinking about the value of that data and who knows, because I'm referencing CEOs and stuff like that. CEO of Waymo said, it's crazy for people to assume that you can just take something that is not autonomous and transfer that data. And all of a sudden now we have full autonomous data and this is the value. And we're just going to make that transfer over. Right. So it is important because I think that Elon, and the way that they've named this has been misleading. It is not full self-driving. It is assisted autonomous driving. It does not count as autonomous. So I'm still open to this conversation. We have this. I think everybody in the market's one of their favorite conversations is the Tesla valuation thing, and I'm here for it. I have no problem with it. But there are many points where I'm also struggling to realize this valuation currently and the opportunity cost of hopping into Tesla at this price point and what I expect to gain from it and see from it in just the near future. How are we going to get to Cathie Wood's robo-taxi autonomous fleet by 2024 when they don't even have any autonomous driving miles to prove that they can do it safely, and also a lack of investment in LiDAR. Every single other car manufacturer has invested into LiDAR, and it's for safety. It's not because of cost, it's because of safety, right? And so we continue to see these accidents, and obviously I hope that this is not due to Tesla malfunctions, and we listened to the earnings call, they said it wasn't. However, somebody brought it up in another room I was in where it's just like, I don't want to see people experimenting on the American population, to be honest. Do this in the lab, get those miles before you bring it to market, but get everything dialed in, make sure the battery is not going to light on fire or whatever it is, and then give it to me and I'll be happy to buy it. And you know what? At the same time, I'm not buying Elon, I'm buying a Tesla. So if the Tesla brand and the value that they're saying to bring, which really would be autonomous taxis, or it would be the infrastructure play, or it would be the solar energy sell off back to the grid play. Cool, but I want to see revenue. I want to see this proven before I just hop into this company. And here we go. We spent 10 minutes just going deep on Tesla.
I'll just make one additional point because you just laid it out so beautifully. But the other thing that is, and it's under discussed, is risk-adjusted returns. Look at the elevated value of Tesla right now, just from a fundamental basis. What are the risk-adjusted returns to go long Tesla right now? These people, they pound the table on this bull case. I can find many opportunities in this market where I can spot inefficiencies in any range of sectors. Why should my precious cap, why should I allocate to Tesla right now at that elevated? I need Tesla to prove something to me at this point. So I don't think people have enough respect for the notion of risk-adjusted returns. It's one thing to buy a scratch-off lottery ticket and make $500, and it's like, oh well, all I need to do is go to the gas station every day and buy a scratch-off lottery ticket and make $500 every day. That's not how it works. It's just not how it works. So risk-adjusted returns, Sharpe ratios. Dive into those.
Absolutely. And I appreciate this. Okay, so Ben, I think I'm getting we have to wrap it up. Text and let's choose a topic to end on. Do you want to talk about the silver trade? Do you like to talk PCI? I mean, we could really go. And let's see what else I had on the calendar that we just didn't make it to. Or we could talk other indicators. It's your choice, man. Or we can talk the volatility trade. I'm really open to all of it, to be honest. I enjoy all of it.
Let's talk vol trade, because that really is something that so the vol trade. I don't think most people understand that if you run a long book, and most people do, right, Elaine? We're talking to mostly retail traders, so they're generally not short in any other than maybe an option strategy with puts, for example. But most people are short volatility, and they don't really even know it, right? If you're long the market, you're short volatility, and that's kind of a misunderstood thing. And like I was saying earlier when I talked about, and of course, Steelyard, we do an SMA, so we overlay. And so it's not, it's not a reasonable strategy for everybody to put on, but you can, own the VIX even through, some of these retail brokers like Webull or Robinhood. I think you can, right? I think you can own the VIX. And so owning the VIX is an interesting way to just simply give yourself tail risk exposure, right? That people don't think about. And again, we always talk about left tail risk, which is like the market's going to melt down and we're going to sell off and everything, the world's going to crash. But not enough people talk about the right tail risk, which is actually more topical at the moment because we're concerned about hyperinflation and we're concerned about global monetary policy being so accommodative. And so people don't talk enough about that. And in both scenarios, yeah, you have asset prices go through the roof on the right tail, but you also have liquidity crunch, because if you own assets and you go through a hyperinflationary cycle, nobody can buy it off you because their dollars don't stretch as far. And it's the same thing on the left tail. When the economy collapses and nobody has any money to buy anything, and asset prices collapse. So liquidity crunches are what the common factor is on either left or right tail risk. What's the one common thing is volatility. And if you can monetize volatility in that type of an environment, who's got liquidity? Oh, that's right, you do. And guess what? That makes you the guy with the golden touch. And so that's what you want to do. And again, it's painful. You bleed premium. It sucks. I mean, it's buying, like I said, it's akin to buying car insurance to some extent, homeowners insurance. But nonetheless, it helps you sleep at night, and protecting against these, Elaine, we'll do another room about heteroskedasticity. You ever heard of heteroskedasticity? This is like a statistical term that gets thrown around, but it's basically like just the clustering. Like when you think about vol, right? It's very clustered. You'll get a shot to 35, 40 on the vol, and it's I always use the analogy of like throwing a stone into the pond, and it creates these ripples. It takes a long time for those ripples to kind of cycle through. Imagine throwing a fucking cinder block into the pond. And those waves take a long time to cycle through. And that's what a 40, 45 print on the VIX does. So, it's important to be able to cycle through these things and understand that. And that's why these trades can be so useful and so smart. And it can be a lot of fun. But again, that's a whole nother room, Elaine. We'll have to do that room. We'll talk vol and we'll talk heteroskedasticity. That'll be a ton of fun.
Yeah, and I'll go really, really briefly because Lord knows we're over time.
Yeah.
I find there are three types of vol trades and people who are interested in it. There's the short-term people like me where, I see some sort of spike in the market. I'm going to hop in the vol trade. It tends to be where I kind of go when I see market just go down. I'm not really exactly sure. I don't want to go short. I'm looking for some place to gain a little bit of opportunity. And like you said, that's that vol spike that you kind of see. Right. If I don't have time to figure out everything that's going on in the market. I don't watch everything, but I do know when we see vol go to lower levels that it statistically hasn't been in since March, there is the potential for that spike. And so when I see, a day when Jay Powell decides to go hard about how, or whatever, when Biden wants to talk about taxes, some of these things like the vol trade is right there for the very short term people. And then there's the people like you who are hedging in vol. Who are doing kind of this long-term thing. And I have another friend who's a fund manager, and he's like, I buy these options, I consistently buy them, and I want them to go to zero. This is my insurance. At the end of the day, this is how I'm hedging on the other side. And I make that payment, and I have no problem if this goes to zero. I'm happy to pay it because it's offsetting. And then there's that third trade, which is shorting volatility. and those are the people who are...
How many guys got blown up in 2018 shorting vol? It's a game. And again, to my point earlier, Elaine, most people are short vol. They don't even know it. They're short vol. If you're long the market, you're short vol.
Absolutely. And that's it, right? The short vol trade is saying, hey, I think the market is going to continue to trend upwards. And I know that at the end of the day, I can gain some exposure to that by shorting vol consistently. And you're going to get that lower price level. And so, without going too deep, I'll let you close out on this, Ben, because...
Yeah. I just want to make one more point because what you said, the second trade that you talked about with the fund managers that you've spoken to that actually pay that premium, they're comfortable bleeding it, which of course I am as well. That's what convexity is all about. You're trying to capture convexity. Now, I talk a lot about negative convexity when I hear about these people coming into these rooms on Clubhouse, for example, Elaine talking about these leveraged ETFs. And I talk about negative convexity based on the guts of it and the swaps and the futures that are used to create the leverage on these instruments. I'm talking about capturing positive convexity, so nonlinear returns, and that's where that premium. You're happy to bleed that premium because when the trade hits, you are able to capture a nonlinear return on a VIX that goes from 16 to 45 in 3 trading sessions. And all of a sudden, that makes up not just for the premium you bled, but potentially 9, 10, 12x, 20x. And that's what the vol trade's all about. And like I said, Elaine, we need to do another room just about the vol trade. I would love to do it with you. It would be so much fun. And again, I thank you so much, and thank Bazinga, obviously Elaine and Chris and everybody else. This has just been so much fun. And Elaine, seriously, you're the best.
No, thank you, Ben. I appreciate you for coming on and hanging out with me. We have so many great conversations. I hope everybody who enjoys you kind of follows you on Twitter, including because you're continuously dropping these sorts of gems. And man, you've helped me. Like, you has helped me immensely. So thank you so much. And yeah, absolutely. Thank you to Benzinga. And, you guys go ahead and tell them if you want us to be able to have the chance to really expand on these things. An hour, it's so fast. It's so short. I have other people I want to bring on and just to have much larger conversations about this because I don't know. I have a great time talking about the market and there's a huge community out there and there's so much value from everybody. So yeah, leave that in the messages. I don't know, smash the like button, follow everything. If you're on Clubhouse or something like that, I see a lot of people from Clubhouse in the chat. We'll see you tomorrow. And I don't know if I have anything else to add, really, to be honest. Let's play it out.
Elaine, did you want to give them the special guest for next week?
Oh, do you want to talk? Okay.
They've been talking about SPACs all day. Let's go ahead and give it to them.
We're gonna have a SPAC specialist, Alex Cutler.
sir. Alex Cutler will be here next Wednesday. He also has an interview with the CEO for CCIV on Friday, so be looking out for that.
Absolutely.
Thank you, Chris. Great to see you too, Chris. That's awesome, man. You guys are the best. Appreciate you guys.
Awesome. So we're going to let it kind of die out. And thank you so much for joining. And we'll see you at the very least absolutely next Wednesday for another session of Aftermarket Therapy. My name is Elaine, aka Stockmom, and I'm out of here.